Yeah. So this is an important piece of the Donor Day content today. Very privileged to have Patrick Camuso, and he's a CPA from a very crypto-focused tax kind of setup. Similar with Robert. I think I'd like to let them introduce themselves. Just a really quick one from me. I'm leading growth at Endaoment. I started my crypto journey very early on with reading the Bitcoin paper, and yeah, I've just been working in the space since 2021. My background's also in sustainability, nonprofits, so have a few different pieces to the puzzle in my background. And really interested to kind of hear more from folks who actually understand the tax side of crypto. I think it's a really important piece, particularly to what we're building at Endaoment, where we brought donor advised funds on chain, allowing for kind of more impactful giving. And hopefully that gets surfaced through the conversation today too. With that, I'd like to give the mic to Patrick to quickly introduce.
You guys having me here today. My name is Patrick Camuso. I'm the managing director of Camuso CPA. We're a crypto-focused tax and accounting firm. We work nationwide, specifically with crypto investors and Web3 companies. So we do all of their accounting, taxes, tax planning. So definitely looking forward to today's conversation.
Fantastic. Pass it over to Robert.
Hi, good afternoon or morning, wherever you may be. I have a CPA license. I'm a tax practitioner. I've been practicing in this area for a very long time, focusing a lot of my efforts on tax-exempt entities. I've been privileged enough to serve on a number of tax-exempt entity boards, worked with donor issues before. I've started 3 tax exempts. I currently sit on a university, $1 billion, that's $1.5 billion university foundation board, where we're dealing with crypto donations. I also serve on several committees that are trying to establish rules within the SEC, CFTC, and IRS regarding the treatment of crypto and what it is, whether it's commodity, property, currency, securities, whatever. And I work with the IRS and trying to get them to be reasonable and rational on how they deal with crypto transactions and write clear rules, notices, Treasury have clear regulations so we all know what we're dealing with.
Fantastic. And Cameron.
Thank you, Vishal. My name is Cameron Browne. I'm a partner CPA at Darien Advisors. Darien Advisors is a Web3 tax advisory practice focused on working with investors, funds, startups, founders, all throughout the whole kit and caboodle. We'll focus really on the US, but also support the greater Commonwealth, so UK, Canada, Australia, and New Zealand. As far as what we can do is we handle a little of the tax compliance side of things, working with founders on token grants, token compensation. Even just yesterday, we were talking through someone that has a significant unlock coming down the pipeline here in the next couple months, and we're like, hey, we should try a DAF, you should try a CRT in certain aspects. So I'm very excited for today's conversation, and hopefully people get a little bit of insight on it.
Wonderful. Thank you for those introductions. And I think it's going to be an interesting panel today. Hopefully we can speak about some of the macro and the micro issues, like what's going on in the market, some ideas and understanding of kind of how tax is an important issue, both at the company, the community, the individual level. And love to kind of hear from someone on the panel. Maybe we start with you, Cameron, on kind of what you're seeing from clients at the moment. What are the most dynamic and interesting areas that you're dealing with 2024 and what's new?
Yeah, I would say in general, we've had a lot more, I would say, resurgence in different chains, DAFs. Now we're getting 1 to 2 years down from the 2021, 2022 bull cycle. So people are starting to have liquidity. There are token generation events. So things start to be moving. And I've even compared to the past 6-7 months. The price of Bitcoin at the start of the year was around 30K. We're looking around 60, 59. So at the very least is hopefully 2x. So now people are a little bit more open to tax planning conversations. We had our most recent dip. Let's do some loss harvesting. But now as we're heading into year end, really kicking up our conversations on, hey, we've got this known liquidity event. We want to deploy this capital into the S&P 500. How do we get there? How do we mitigate tax impacts? And how can we put those dollars to good?
That's great to hear, particularly with what we're trying to encourage with on-chain giving at the moment. Patrick, do you have anything you're seeing in the market right now that's especially interesting?
Yeah. From a tax perspective, I would probably say two things. Number one is there's definitely a greater focus on wanting to get into compliance. We're seeing a lot of people come to our firm that still haven't, filed or done their accounting for several years, and they're realizing that the regulatory environment and the IRS is going to continue to focus on crypto more. So, we're dealing with a lot of that, just helping people get caught up on their accounting. Also, similarly to what Cameron mentioned, with some of the movements that we've seen in the market this year and some of the optimism for a lot of people looking forward, they're wanting to get their accounting updated. They're wanting to look at their tax positions and, focus on tax planning to prepare themselves for the next moves in the market and make sure that they're positioned well, overall in their portfolio, but also from a tax perspective.
That's really interesting. I think one of the themes like that is coming up yesterday and I think is quite interesting is kind of the next generational kind of wealth transfer plus next generation donors. I wonder if any of you are working with that sort of succession planning or families in this sort of space, and what sort of trends are you seeing that might be interesting for folks like us at Endaoment or in the audience or the nonprofits on the receiving end? Anyone want to grab the mic?
Yeah, that's
Robert can
yeah. Family wealth transfer planning is a great part of my practice, and I also practice it on the other side where I have to ask people for money to give to my university and plan around that. There's going to be one of the largest transfers of wealth in history that's going to happen over the next 20 or 30 years as baby boomers who have created a lot of wealth are going to die and they're going to pass it on. What are they going to do with it? I mean, I was talking to a family last week where they're not leaving it to their kids; they're leaving it to their university. At their university, they're going to become the largest donor to the university. A lot of people that in the generations that I'm dealing with, they said, I've made my money, my kids. I've given my kids an education; they can go make their wealth on their own. I'm going to leave it to something that's meaningful to me. There's other people on the other hand, where they really want to leave it to their family. And what do you do with respect to appreciated assets that you want to give in a tax efficient manner? Well, we're at an interesting point in time for estate planning also, because it's over $12 million is the annual exclusion per person. I think it's I'm using round numbers. I think a family gets 25 million. You want to use that up in transferring wealth to younger generations before the end of 2025, because we don't know what's going to happen at all with respect to the lifetime exclusion. Then it could stay, it could go up, it could go back to $5 million. Thankfully, the IRS or Congress has said there'll be no clawback. So I'm working with families right now to try to get wealth out of older generations to younger generations, and also plan for legacy giving. And what I am seeing more are people motivated by something. When I mean legacy giving, they want to make donations where it'll have some impact on the organizations to which they're giving. And I'm seeing more contributions to social welfare agencies, less to museums and art places and churches, and more to organizations that will be making an impact that will carry on past the donor's lifetime and past their very narrow interest, that will impact society as a whole. And a lot of there's being a lot more giving to universities too. So that's what I'm seeing right now. Whether it be regular, good old, tangible, intangible assets that we know, fiat currency. There is some crypto giving, but this generation really doesn't hold a lot of crypto assets, and they're not really. I doubt if you'll ever see them in the boomer generations. I was reading something the other day that is really the least likely generation to ever invest in this. And if they're going to invest in it, they're going to do it through ETFs or some other manner.
Very interesting. I think we're also we'd be remiss not to mention like the donor advice fund as like the primary vehicle which we employ for donors on endaoment.org. And I think really interested to know kind of what folks feel the literacy is for new donors or like with the wealth transfer on donor advised funds. One of the big things that we're pushing right now, and we'll give a shout out later, maybe someone will chuck it into the chat, is doing education workshops, particularly to crypto communities around donor advised funds, what you can do with them. I'll throw it to Cameron to answer that question, also your own perspective on this kind of next generational issue.
Yeah, I would say I'm probably on the flip side of what Robert's had in the past. I would say a lot of our clients, when they have this, newfound wealth, it's not from, my first CPA practice. So they've had a small business. They're a little more, their financial acumen's there. They maybe have a, a real estate property. This may be their second or third business. So the kind of the literacy around charitable giving, even just having a more like tax planning strategy is just not there with these clients. So we're talking the first time that, hey, you can donate your crypto, avoid capital gains, throw it into, just donate through, the traditional on-chain giving, and be no worse for wear. And it just, then we're going steps by steps and down the rabbit hole where we kind of just like toe in the water with, you've got some BTC in ETH, great, go donate it, wipe yourself with capital gains, get the nice charitable contribution deduction, throw on your Schedule A. Next step up to that is, let's look at a DAF. You have control over it. You can make the donation this year when you have an income event. Then we can then disperse it at a later date as you kind of see fit, or even just grow the underlying principal to go down the road. And then, the step up from that is, looking at some sort of like charitable trust structures. So do we say that's more legacy wealth planning, thinking just beyond like the current tax year? We've had some clients, one was an early investor in Axie Infinity, went from, a couple $10,000 to like $7 million and set up a CRT. Those type of things are awesome. But for your average everyday investor, you've got 50 grand you want to give away, set up a DAF. So we're doing a lot more education on that front, just making people aware of it, because most people just, send their, contributions, a check, online payment, and aren't even aware that you can actually donate your crypto.
Makes sense. I'll try and keep the conversation moving along as well. And I think,
yeah, let's take a couple steps back for a couple minutes. I don't know what the education level is of the people that, I'm sorry, the savvy level of the people who are listening to us. But really what we're talking about here is we're using appreciated assets with low basis. Basis is what you pay for it. And you're giving an appreciated asset to a charity in a tax efficient manner on a pre-tax method where you're getting a donation subject to limitations. There are AG limitations, and you have to be careful of the timing of these because of the standard deduction that you get here, the timing that you give them, limitations on your ability to tax deduct them. But nevertheless, if you give an asset you held for investment to a charity, you get a deduction for the fair market value. So if you're giving Bitcoin that you bought back in 2012, when I don't remember what the price of Bitcoin was in 2012, but it wasn't a lot of money. So if you're giving that appreciated asset, you may have bought it for $25, and now it's one coin is worth what, $30, $40, $50,000. You're going to get a deduction for what the fair market value is today, not the $25. That's the beauty of it. You never have to recognize taxable income with respect to that charitable contribution. It's exempt from tax, and you get a tax deduction. It's the most beautiful thing in the world.
I'm very happy that you brought it back to the brass tacks. So I think it's not clear in the audience exactly, and we talk about the education piece, like we're in a position here to educate as well and help folks understand kind of why it's beneficial. And it's something that I discovered as I joined Endaoment as well, how this whole system works and why it's so valuable. It's been used for many years, and is an increasingly used vehicle. And I think we try and make it funny with DAF Squatch. I'm seeing in the comments, DAF Squatch cracks me up, etc. We try to make it a bit more memeable and shareable and exciting as well. But we see, $250 billion in DAFs, and there's a reason for it. And even in Web 2, you see folks getting appreciated stocks as part of their compensation, wanting to start to do some more functional tax planning and do good. And it's great to see that folks are becoming more educated about it, and you guys are trying to help your clients get down that road as well. And I guess another question is with crypto specifically, and how do you guys see the assets, like complex assets like crypto? What do people need to know about appraisal and donations, and how do you make it super simple for them to understand, and where do you see people struggling? I'm gonna hand that back to Patrick.
Well, yeah, I think there are some more specific considerations when you're dealing with complex assets like cryptocurrency, for instance, that's taxed as property. As you alluded to, one of the requirements if you're going to donate over $5,000 of crypto is that you're going to have to get a qualified appraisal in order to be able to deduct that on your tax return. So I think, with considerations like that and just the tax planning for charitable giving and how it's going to fit in your tax plan overall in general, the real key is to plan ahead. I've had people come across my desk that have overlooked the opportunity for charitable giving in a given tax year where it may have benefited them, or maybe they went ahead and took that step and they've overlooked simple things like going ahead and getting the appraisal. So I would just say it really comes back to just, sitting down with your CPA and planning ahead, look at keeping your portfolio up to date to understand what your cost basis is, and then understanding, what are the different scenarios on where can the market go, what position is that going to leave you in, and how is that going to impact you from a tax perspective.
And cost basis is becoming harder, is because there was a revenue procedure that just came out that we're dealing with the DA CPA, because most practitioners, A, don't know about it, and B, the public doesn't know about it. And you have until the end of the year to come up with a methodology and to come up with the basis for the coins that you have in the property that you have in your wallet, which tracking basis is going to be a harder and harder thing to do. And with also, it's going to get harder yet in 2026 when you're going to get a form with respect to your crypto holdings, a form 1099 DA that's like a brokerage form that's going to report your basis. But the question is the basis on that correct? And you got to be careful. So Patrick is right. You got to you literally still have to keep track of your basis, which is important to know. Because you still have to report, you have to report that on your tax return also. But the IRS IRS and Treasury is not being friendly to crypto investors about what you need to keep track of and what you're going to need to report and what's going to be on those 1099 DAs. You're going to see more and more information come out. My hope is that the groups that I'm a member of, we're going to start having webinars and putting out publications, because it's the iceberg that you don't know is out there in the ocean.
Yeah.
It's going to sink the ship.
And if I can add to that, Robert, I see that a ton, just as we're seeing a lot of people that haven't filed for years and we got to get them caught up with their basis. We're seeing a ton of people who have been doing their accounting, either self-reporting or, maybe they were working with a firm not fully versed in accounting, and they're coming with sometimes years worth of discrepancies in their ending cost basis data. And, when you compare your calculated to your actual, it's very easy to see what those discrepancies are, but sometimes the taxpayer's not realizing it because all of their capital gains calculations match. They're not doing the comparison on their cost basis information. And then it could sometimes be multiple years until they realize that there's discrepancies there. So it's very important to have that cost basis data updated just to ensure overall accuracy in the current year as well as future years. And I agree with you as well, with the 1099 DA coming out and the new basis requirements, that's going to ensnare a lot of taxpayers because it's hard enough to get your cost basis data updated accurately now. But when you consider that, a lot of people have been, incorrectly, more or less, applying specific identification just with the blanket HIFO, they're going to have to correct all that. And I don't even think most taxpayers are aware of it. So there's a lot of hidden issues just in that cost basis reconciliation.
There is, and also we're unsure. We're writing a letter to the IRS. This is the AICPA Digital Asset Task Force. We're writing the IRS to say, even though these rules are supposed to be prospective, they actually, the way that they are worded, they could be retrospective back to all open years, and these basis rules may apply back 3 years.
That's how I viewed it with the Q&As, because they didn't specify one way or the other. But if you really consider it, people that are just taking that universal approach, jumbling together their cost basis across different
Ah.
exchanges when the flow of funds doesn't match. You know, it's I don't think it was ever really an advisable approach, but now with this new guidance, people are going to have to, you know, follow the revenue procedures and start to correct that moving forward.
And you got till the end of the year.
Yes, yeah.
Good stinking luck.
So one of the questions I had around this whole topic, I guess, and there was also a question from one of the audience members on kind of what's the impact of new policy. There's a very specific call out around Trump's note on not taxing capital gains for crypto and impacts of that on philanthropy. I've not heard about that before, so I don't know if this is knowledge to you or not. But generally speaking, there was just a general question from my end, like for the audience, is when is the right time to engage a CPA or advisor? Does it have to be when you've got a liquidity event coming up, or like how do you, like, from what's the best practice and what's worst practice? Maybe some stories, war stories would be good to hear.
I'll take a look at that one. So in the interest of job security, the sooner the better, right? Yesterday, but no, jokes aside, we've had quite a few clients that have, you know, self-managed. The tools have gotten crypto tax calculator, coin tracking, even Coinly in some certain instances. Again, depends on what people are up to. If they're just swapping, buying on exchanges, doing some limited like decentralized finance, like they can probably get by. But much, you know, with Patrick's point is once there's more complexity, say, you know, you're doing validation services, you've got larger positions in DeFi, you're doing DeFi in a chain that's not supported. As things get more complex and there's more room for error and the tools that might grab and transcribe the data, then having at least a qualified set of eyes at least review it or do the full service of it and carry it from start to finish. Because you know, understanding basis, understanding which tax lots are there really underpins everything when it comes to charitable giving. If this BTC is saying, hey, we're going to value it at 70 grand basis, I bought at the top of the bull run, and I've got another here in my lot of, you know, 30 grand, I'm looking at which one I actually want to donate. And if those are inaccurate values, it's also going to influence the capital gains considerations, charitable giving considerations, and all that and whatnot. With regards to, you know, people that should be consulting CPA, you know, more money, more problems is generally like a good adage to use. So when it's actually higher dollar value, we're looking, you know, high, you know, mid 5 figures into 6 figures for a liquidity event or capital gains. We have, you know, life events where, you know, we have children we're trying to plan for. Once things get more complex and outside of your own management, feel free to reach out.
Yeah.
But you know, most people on their own volition, on accord, they can, you know, contribute charity or contribute crypto for charity. They can set up a DAF quite easily with your guys' platform. So the initial like layer, the barrier is not there, but it's a matter of just choosing when, how, what fashion does align with other life goals as well. So we work in tandem a lot with attorneys, financial advisors, RIAs, because it's not just simply tax. Like tax is great and underpins a lot of what we do, but there's also life that happens as well.
Yeah. So you know, it also depends on what you're doing with respect to crypto. You can be an investor, you can be a trader, you can be a miner, you can be a lender, you can be all sorts of things. It depends on what you're doing. If you're a trader or if you're mining, it's better to talk to a CPA because there's specific rules that deal with that. If you're a miner and once you own the crypto, that, you know, that's ordinary income with respect to what you earn, then it becomes an investment type of asset. So you have to be able to A, to track basis, B, and what's going on with respect to afterward. And there's a difference in how you deduct your expenses. If you're an investor, you're going to get very little deductions with respect to expenses you spent with respect to your crypto activities. If you're a trader, there are certain activities that make you a trader that you're able to deduct your expenses as if you're in a trader business of doing something. Same thing if you're a miner, you have ordinary income, you have ordinary expenses. You're going to end up with the net profits being subject to self-employment tax. So what I encourage people is to tell me your story about what you're doing with respect to your crypto assets and your other assets, and we'll plan out what you're doing. But again, it's your activity, the volume of it. If it's just my kid that's trading crypto occasionally, he really doesn't need to talk to me because he's probably got some gain or losses that are investments, and somebody like CoinTracker is going to give him the information. That's good enough. If you're into more sophisticated transactions, whether it's crypto or other stuff, then you really need to talk to a qualified and professional to help you, guide you through it, to get you the correct answer and understand what the implications are. It's like, the one thing I think that, the three of us will all agree is we're dealing with an antiquated tax code that was written originally in 13, amended in 54, amended in 80, I'm sorry, 39, 54, 86. That was done for a society that doesn't really exist anymore. It was done for a manufacturing, agrarian, mining service economy. And now we have all these other types of transactions that are happening, and the tax code and what's going on don't fit one another. And the IRS and Treasury and Congress are slow to react to all of this stuff. So, you need guidance in dealing with this, because you need someone to help interpret how what you're doing today in an electronic currency environment or a virtual currency environment reacts with an analog tax code. It's a struggle, and I'm sure Cameron and Patrick probably have great war stories who have had dealing with clients of trying to make the two mesh.
Many.
I think it's a really interesting point that there's a constellation of advice and circumstances that need to be considered as you're kind of going alongside, let's say, donation or wealth planning in general. We've worked quite hard this year to originate and develop our tools for RIAs, financial advisors. We already tried to be kind of on point with the reporting required. Obviously you need to consult your CPA, but try to make that as easy as possible, as digital as possible. But now also, I think this is another thing that's valuable about a DAF is once you give, you can also look to invest the assets within the fund into portfolios. And we try and offer donors on endowment both traditional portfolios like ETFs and index funds, money markets, alongside the newer, more exciting, perhaps, and maybe more risk-on crypto portfolios. I think there was a question in the chat, donating crypto, can you effectively guarantee appreciation? Is it safe from depreciation? I think that's a very dangerous question to ask them. But I mean, I can ask it to you guys. Is crypto safe from depreciation when it comes to legacy giving? And I'll throw another question here as well to bunch them a bit. If you could give donors 3 top reasons to donate to charities using crypto, what would it be?
I'll bite on the first one. Yeah, markets are only going up. There's no such thing as depreciation. But no, the beautiful thing about donating crypto, though, and this is the nice thing about how it gets treated as property, and alluding back to what Robert had stated, is that we get to take a charitable contribution deduction at the fair market value at the time of donation. So whether that depreciates significantly in the following year doesn't really matter, because for tax purposes. Now, obviously for the underlying beneficiaries, different consideration. But from a tax purposes only, like you're basically depreciate your deduction, apologies, is locked in at the fair market value at that time. Yeah. And then the next one too, there was, yeah.
So it's also a point that we surface with crypto communities as well, that if folks want to like stabilize like an impact commitment and they've got a meme coin that's just zooming up like 10,000%, like you want to put 5% of those gains, like no matter what happens in the future, you've stabilized that commitment at that point as well. Yeah. But yeah, you had another point.
No, I was actually going to ask the second question. Was 3 items. What was the? Apologies. It was the.
I'll repeat the question. So if you had to give donors 3 top reasons to donate to charities using crypto, what would it be? What would they be?
Yeah. Well, one, it's better to donate crypto than cash to charity, because back to what Robert was saying, it's treated as property. So if you have an early cost basis, if you bought Bitcoin ETH back in 2017, amazing, you're selling today. You certainly have quite a bit of unrealized gains. Those are awesome assets to essentially donate because they have a very, very low cost basis. I'll kick it to somebody else. We'll do a roundtable.
Yeah, I would say definitely the biggest sell is the potential tax benefits, like Cameron is saying. But I think in addition to that, depending on the crypto asset, especially if we're talking about Bitcoin or Ethereum or a large cap, and you're going to donate that, the potential for the long-term charitable impact, if you expect the market to go up for an asset like that, can also be very large.
Yeah, if it's the if again, if it's the assets that you own and you're charitably inclined anyway, it's not like, crypto is going to make you want to make a charitable contribution. I mean, if it's the assets you own, and rather than having to sell something or using some other asset that you can't leverage like you can with crypto, I mean, it's best to use crypto. I can't, it comes down to, it's like, charitable giving, it's in your heart. It's not what the assets and what the gain is, and you want the tax benefit of it anyway. And I tell my clients, okay, so if we're gonna be charitably inclined, let's do it in the most tax efficient manner we can. So crypto right now offers, because of the appreciation of value over time, and especially if you held it, really is an asset that you can get greater value, it's tax savings, but a bigger bang for your Bitcoin or a bigger bang for your buck to give it away than it is for fiat currency or something else.
Take number three, Vishal. I think another one is just like support broader adoption. It develops a use case for cryptocurrency other than just like a method of payment, or for decentralized finance, or buying NFTs, or play to earn with a B. The more use cases for cryptocurrency as an asset is just, better overall for the ecosystem. So if we can demonstrate you can use it for charitable giving, to fund a DAF, fund up a trust, it's a win-win for the industry, and job security as well.
And I learned something from talking to Endaoment that I did, because I sitting on a university board. There are certain, when you're sitting on a charity, you're not going to hold a cryptocurrency. It doesn't make sense for us as a university to hold it. We're going to sell it right away. And there are certain organizations that will take the crypto from the person and convert it to fiat currency, and it ain't cheap. So the deal is, if you use Endaoment, the cost is so much smaller. You're also getting more impact to the charity, giving them a better deal, putting it into a DAF through Endaoment than you would if you gave it to, directly directly to the university, to whatever the charity is, and there's a middleman in there taking the VIG. The VIG here is much smaller. I'm encouraging, in fact, I think we're in discussions with Endaoment to work together with respect to crypto giving, because a lot of charities are new to this. I mean, frankly, they're not set up to accept crypto first. They have to convert it. It has to be converted to fiat for the charity to accept it. DAFs are great because you can take the crypto, invest it, turn it into like we said, ETFs or something like that, and eventually the donations could be made in cash. So it gets the charity where it wants to go, and it also allows the donor to get a better utilization of their dollars when they give it to the charity.
Really appreciate that endorsement there as well. I think the key things that we're trying to break down as well, really interesting points raised as well. Like I think it's really funny because people are always talking about what's the utility of crypto, and there's a lot of and people are always wondering what the killer app is, and that's a question for other folks perhaps. But obviously stable coins have become a hugely adopted part of the crypto ecosystem with quite a lot of capitalization. It was discussed yesterday. Also, the impact on treasuries and things like that is very interesting. But the ability to actually do something with your crypto, to use the stablecoin infrastructure, is something that we've really tried to implement from day one. And I guess the other thing is the idea that charities sometimes will come to us and say, how can I accept crypto? It's really seamless. If you're a 501c3, if you're in good standing with IRS, or you're one of the charities globally that's on Endaoment, you can effectively just take a crypto donation from a donor on Endaoment, or from a DAF on Endaoment, and you can get a wire transfer. And I think the really important thing, just to reiterate, that Robert, you mentioned, and I think this is really important for the audience, if it's not clear already, there's a huge difference between selling and then donating in terms of the tax benefit. And you know, I'm not the CPA here, this is me learning this as well, to just donating directly and gaining this benefit of donating your asset. Not a financial advisor, but I personally think this is a very important point to showcase.
Right. The takeaway is don't sell appreciated assets to make a cash donation. It makes no sense at all.
Amen.
Absolutely.
I'm going to pull the conversation back to a question which is a bit more general, which is, I'm into crypto. I want a CPA. How do I find a crypto in my area that's familiar with crypto donations? Is this a question that you guys can answer?
Well, you know, what I would recommend is finding someone that's familiar with cryptocurrency, you know, like Robert, like Cameron, like myself, or, you know, there's many others out there. Maybe they're in your area, maybe you're not, but what you really want to focus on is someone that is literate in crypto. You don't want to be, you know, having to really teach your CPA about cryptocurrency. They should already know about it. And there is somewhat of a learning curve. So, you know, I would seek someone that has that expertise, and if they can be in your area, you know, there's many different sites that, you know, we're all on list online on different places, on, you know, places like Coinly, and a lot of these softwares list a lot of the CPAs sometimes by location. So I would maybe check there.
Thanks for that.
Yeah, I would say, as far as like finding, I mean, much to Patrick's point is, you know, there's a lot of, I would say, this is back to the bull run too, is there'd be a lot more, I'd say, like crypto CPA charlatans, people that can or say they accept crypto or understand crypto. So, you know, going through with a prepared set of questions or an intake questions. So ask, you know, what's their software stack? How do they appreciate certain account for certain transactions? What are their thoughts on XYZ most recent, you know, revenue ruling or, you know, tax news, et cetera? They should be at least somewhat versed in the comings and goings. When it comes specifically to cryptocurrency donations, though, a lot of these platforms, Endaoment, et cetera, if you're using them, it takes care of a lot of the dirty work to make it really easy so you can work with just the standard CPA. But getting there to select which assets to donate generally takes, you know, someone else a little bit more experienced. But the same rules underpin, you know, I jokingly like to say is like when we're working with startups that focus on crypto versus a traditional corporation, it's still a corporation that just building crypto at the end of the day. So all these principles are still there. Like a qualified CPA should be able to speak to it, but when it comes to the actual intricacies of reconciliation, knowing the assets, what you've been up to from the overall activity standpoint, does take a qualified expert.
Interesting. I would ask one of the questions, and maybe this is more directed to Endaoment than the CPAs on the call, but maybe it's something that you have experience with as well. So Nyla's asking, the organization I work for has accepted crypto from donors before, and we would love to learn more and be better at it. So who could I connect with for a consult? And, you know, from Endaoment's perspective, we can help you to the extent that we can help you, right? But I wonder if you guys do work on the nonprofit side at all. Is there any demand for your services on that side of the coin?
Yeah, I'll tell you, most tax exempts, more than a lot of the sophisticated ones, you know, are having to deal with this today. And I know that some of them, you know, it's universities have been slow to take, you know, to do this. There, some of the larger ones, I'm sure, have been quicker. It's you know, like I know for a while the Metropolitan Opera said, you know, we're never going to accept crypto. I don't know if they are or not. You know, they decided yet. But, you know, there's a lot of opportunities of education. So that's where you become helpful. That's where you become helpful. We become helpful. Is we talk to tax exempt organizations and we help them learn about taking crypto donations. And it's the same thing with appreciated stock. Yeah, you can go to your local church, synagogue, like a local YMCA, whatever, and help educate them. And then on the other side, you can work with their donors to have them give crypto or other appreciated assets. So it's a win for everybody, and you're providing more knowledge that makes you more, is a leg up in other practitioners in your area or other tax exempt in your area.
Any other war stories from working with nonprofits?
I mean, we've done some work essentially, I'd say, from the ground up. So organizations that want to spin off their own nonprofit, either a 501c4 or 501c3 type arm. And I would say like starting from day zero, accepting crypto and transacting on chain. So it's been kind of a fun accommodation. Unfortunately, I haven't been living within like the trad world for quite some time, so trying to get people onboarded. But I did do quite a bit of work back in the day with B Corp sustainable orgs that I could probably do much too. To Robert's point, do some education and just advocate.
Yeah, one of the things that we've started to surface is, and sometimes there's an issue, is folks who don't have a charitable entity around work that they're doing that requires some level of fiscal sponsorship, and it can be different for different industries. Like, I was quite fascinated and interested in the kind of open source space on this, like what's required for supporting a developer community at a small or a large scale. But yeah, I think that's also an issue that requires proper planning, but perhaps on the other side of the coin from today. So I guess we talked sorry, please.
There's another point I wanted to make, and Cameron just brought it up because he meant there's different types of tax exempt entities, and only 501c3 organizations can accept charitable contributions and allow you to claim a charitable deduction for making that contribution. Those are what are known as charities. That there's a specific section of the Internal Revenue Code. So when you're giving your money, one thing you should find out is to make sure what the tax status is of the organization. Cameron's laughing because I bet you he's run into this before, where somebody oopsed and gave their money to like a 501c4 or some other type of organization that found a public charity, and they couldn't deduct it. And they go, what the heck? I gave the money to the ones that are famous are like the guys that call you up on the phone for the firemen or the whomever they are, the Fraternal Order of Police. Yeah, and you got to be careful. So, do your due diligence for whom you're giving your money to. Make sure that they qualify as a charity, and they give you you need a receipt. You also need a receipt from them to substantiate what you've given, and you've received nothing in return for it. So make sure that you're getting all those things to make sure you have a qualified charitable contribution. Sorry for interrupting you, Vishal, but it was like one of those points that had to be made.
Yep. And the wonderful thing is the IRS has a list of all these tax exempt entities you can search for on their webpage. So if you have any doubts, plug them in there. They may have a different legal entity, but you should be able to verify. Hopefully, in most cases, barring they have a DBA.
or you can go to GuideStar, which is, I don't know if everybody knows what GuideStar is, but GuideStar is where most so charities have to make their tax returns available to the public. And GuideStar, there's probably a couple other ones, but that's the one I've historically used. But you can go to GuideStar and take a look at their tax returns to make sure if they're complying with the tax laws, how they're using their money, and if they are a 501c3 or a public charity.
Actually, another thing with the DAF is once you donate to the donor advised fund, you're donating directly to a 501c3, given that, say, an endowment or whoever the DAF sponsor is, it has that requirement. So for in endowment's case, that's the point of donation, and then any subsequent donations will be compliant, right? So that's the other nice thing.
That's the beauty. DAFs are a beautiful thing. Without they're great. I mean, I encourage my clients to set them up all the time. Yeah, especially wealthy families. They used to set up private foundations. Private foundations are a pain in the ass to deal with and to have to file the tax returns. DAFs take that away. Take that compliance burden away from you.
Is there anything coming up in terms of DAF legislation that folks need to be aware of, or that you guys are particularly savvy on that you think either builds the case, or like is there a bull or a bear case for DAFs for you folks at the moment?
Look, I think if we start to see the market appreciate, that definitely creates a bull case for DAFs, because more people are going to be sitting on realized gains most likely, and start considering tax planning strategies like this in deeper detail.
With liquidity. Go ahead. Sorry, didn't mean to interrupt.
I was just summarizing. I guess it kind of
All right,
correlates.
so I want to summarize one other thing. So especially because of the way that the standard deduction works today, it's better to bunch your charitable contributions into a year where you're going to get a bigger bang for the buck. And DAFs can allow you to do that. You can lump, yeah, you can take 2 or 3 years worth of contributions, put them into 1 year using cryptocurrency or other appreciated assets, and get a bigger bang for the buck, especially if you think there's going to be a downturn or something else coming along where you actually get to use the deduction where you might not otherwise get to use it. So that's another great reason for using a DAF for charitable contributions. Bunching
Agency.
charitable contributions.
Yeah. Can you explain how bunching really works, or when it's valuable?
Sure. I mean, like I don't remember the number. I'm just gonna pick. So let's say you're a single person and the standard deduction is $17,000. And if you don't have greater than $17,000 of charitable contributions or other deductions like state income taxes or mortgage interest, if you give less than that amount, you're not going to get a deduct. You're not going to get the benefit of making that charitable contribution. So you want to bunch them together where you're going to bust over the standard deduction amount and actually get value for what you've given away.
And what sort of assets beyond crypto do you see folks kind of donating in this way with this sort of high gain? I guess you mentioned, Patrick, property in general. Like, what are the most popular assets to give? And like, I guess stocks would be another, right?
Yeah, I would say stocks would be the next most common.
It depends on what you own that's appreciated, in all seriousness. I mean, if you own artwork and you're inclined to give away artwork, it's artwork. If it's stocks, most people own stocks. If you're receiving IRA distributions, you can use up to $100,000 of what would be your normal IRA, required minimal distribution to make contributions and do it in a tax advantage manner. It just, property, and the rules are different. I mean, cash you get, it's a 50% limitation of adjusted gross income. That's what you're limited to for, I think it's long-term capital gain assets. This is terrible. I always have to look this up. I think it's 30% is of adjusted gross income. My brothers will tell me if I'm right or wrong on this because I don't always remember that number. But again, so we talk on one side, we've talked about bunching them, but on the other side, you don't want to over contribute either. You have to look at your adjusted gross income, because you want to get that deduction sooner or later. You're not going to lose it. It's going to be carried forward up to 5 years, the excess. But a dollar today is better than a dollar tomorrow.
Very sensible. I think it's interesting also as you speak about art. We obviously see NFTs sometimes flowing in, and I can imagine some of you might work with NFT communities, which oversee kind of quite wild gains. I don't know if anyone has any war stories from the more artistic side of crypto.
I'd say I haven't dealt firsthand. Something came through one of my FA clients that donated. I think thankfully, like that's kind of died down a little bit as far as like as far as like the euphoria about it, which makes it easier from the valuation standpoint. But contrary to fungible tokens, so Bitcoin, Ethereum, etc., the valuation is pretty easy. We just go out and look at CoinGecko, CoinMarketCap. There's a sizable liquidity. It's pretty easy to say what the price of Bitcoin is when you donate it. When it comes to NFTs, it's a bit more fungible, and the fact that we're looking at prior sales, we're looking at the overall collection price. What are the attributes of this random NFT? Does it have a black hat versus a red hat? Like these are things that are very subjective, but actually do influence the value of what is being donated. So there are a few firms dedicated out to it. I've heard Technos do it. A few other specialized crypto appraisals.
Technos is the one I used.
Yep, and they'll also do it for like early stage tokens and ventures. So when people are doing their like token grants, their allocations, their RTAs. There's also Redwood out of the Bay Area as well. But yeah, they'll do for more like fungibles and then also non-fungibles as well. But it's a headache, and thankfully I have not had to deal with it, but I welcome the opportunity.
Very interesting.
I talked to one of the guys I work with it's Casper Schouten.
Oh yeah, It's fantastic.
Okay, everybody knows Casper. So he's like their expert in digital assets, and he tells very interesting stories about having to value these things.
Very interesting. We also like we see some like crossover between public goods and I mean particularly for the nonprofits on here might be of interest. Like we actually work with a few NFT communities that kind of have public goods either baked in. There's one called Nouns. I don't know if you folks are
Oh yeah,
familiar.
that's dope.
So they've actually committed 120 ETH over 10 years to the Universal Impact Pool on Endaoment, which is a quadratic funding like matching algorithm. So as folks donate on Endaoment to the Universal Impact Pool, you see like existing donations being kind of boosted for that quarter from these sort of matching funds. So it's quite an interesting story for nonprofits who aren't familiar with crypto to kind of to learn about kind of how, first of all, like matching works and why they're getting more money than someone gave. In addition to the tax benefit, there's also potential re-ups and matching kind of pools that exist and game dynamics in crypto, which I think these like public goods communities sometimes can leverage and contribute to. We're also kind of working with Gitcoin, and you saw earlier Giveth, and there's like it's very interesting. Like people talk about crypto, it can be a bipartisan issue, but it can also be a the tide can rise everyone, and all the organizations as well within the on-chain giving space. I'd like to see. We're coming to time. I just wanted to see if anyone's got any closing thoughts or anything that like what's the most important thing to get across in this whole education piece, or what could we be doing better as Endaoment or as other actors in the space, nonprofit or otherwise?
I think the biggest piece of advice is, if you're considering charitable giving or if you have a complex crypto portfolio from an accounting or a tax perspective, to sit down with an advisor and plan ahead, and that charitable giving can be an integral part of your tax planning strategy.
Sounds good.
The rule. There are regretfully there are very few set rules with respect to crypto and taxation. I mean, there was really one or two notices and a couple of revenue procedures, and the IRS is not coming out with any additional guidance on this. I know the guy that heads up the on the Treasury side, the rulemaking side, and it's not like, was it Dante, give up all hope, ye who enter here. I mean, it's, enter here with caution, enter here that the tax rules are not really been set with respect to what crypto is, with the digital assets in general. Know that you're dealing with an antiquated tax code. Make sure that if you're taking a position with respect to whatever you're doing with crypto, that it's well thought of and documented, and there is some thought in tax legal justification for it. But it's crypto is very powerful, and it can be used for since it's highly appreciating in a lot of cases. It can, if you follow the rules, it's a good asset to use for certain things. Just beware.
Very interesting.
I would say, oh, sorry.
There was one last question. I'm not sure if I understand it. Maybe you guys do. If a charity holds crypto, then we need to pay attention to this deadline. I'm not sure which deadline that refers to, or what deadline they might be referring to. Or if charities moving forward want to hold, this sounds like a factor. Are there deadlines or aspects of holding crypto that charities need to be aware of? Sorry to cut you off there, Cameron. If you had I'll go for that.
Let's see, pay attention to this deadline of the charity. Potentially. I mean, I'm not very thoughts on that one. I'm not sure it's picked the deadline. I know we referenced to potentially next year with reporting with the 1090 DA. Obviously, I mean, donor reporting still there for anything over 5,000 regardless on Schedule B, but not entirely certain of the question.
No worries.
I agree. There's no deadline. I mean, there's really no inherent deadline with respect to crypto within the tax exempt rules at all. You just report it as another asset. You just report it as on the 1099, it says cash other property. I guess you would report it there, and yeah.
I think it was a reporting deadline, reporting at the end of the year. Is there any reporting requirements for charities around holding crypto? But I'm not sure.
No, I don't believe so. It'd still be needed to include in your Schedule L, the balance sheet of whatever the value, the cost base of the
Yeah.
assets received, but nothing specific as far as like, I'd say additional disclosures.
Got it. Cool. So I think we are near, I think we're at the end of the session here. I think we have a little bit of a break in between sessions. I first of all just want to really thank Patrick, Cameron, Robert, all of you provided a wealth of knowledge and perspective and experience. I think to have this sort of CPA clinic is something super valuable to folks, and really feel blessed that you guys have all taken the time to come on, particularly you, Cameron, with your new arrival at home, which I really appreciate you taking the time, all of you. Yeah, I just